Looking at how much Tesla stock is up, this has to be one of the best news days ever for Tesla. So what's going on? I was totally right saying that Elon Musk would not have made this announcement that he is pro-removing tariffs unless the president was already okay with it. So I was definitely right about this whole situation, and I predicted why Elon Musk did what he did. And now we have this huge news story about tariffs, which is why Tesla stock is up so much. And if you like Tesla stock being up so much, make sure to click the like button right now. And now here's me diving into the news right before the big news came out, and you will see my live reaction to the news coming out. Elon Musk made direct appeals to the president to reverse new tariffs. However, these direct appeals were not successful, but I would say that yet, because we have seen Elon Musk post on X quite a bit about how tariffs are not exactly a good idea in the long term, and Elon Musk has been calling for 0% tariffs between the European Union and the US. And if the president was completely against it, I think he wouldn't really quite let Elon speak out on this issue as freely as he is speaking about this right now. And I'm pretty sure this is somewhat related, and this message I think was sent directly to Tesla stock investors. Elon Musk posted here, "Don't panic." There's also a huge clash between Elon Musk and a high-ranking White House official, to which I will get to later. Elon Musk went as far as calling that White House official a moron. Just hours ago, China applied new tariffs equaling to 84%. However, the president yesterday in the evening delivered a speech saying that China wants to make a deal with the US, which to me clearly indicates that the reason for the tariffs is simply a negotiating tactic to get better trade deals later. Supposedly China is the only country that escalated on trade, but actually the European Union did as well. It's just that the president really is only calling out China because perhaps, and I think this is actually right, he wants the European Union to move away from China. Also, there's some escalation between the US and Canada as well, but Farzad keeps forgetting that we exist. And the president said that many of these countries are calling him and they are trying to make deals. For example, the Japanese are flying in. So clearly the president wants to negotiate, and when you put high tariffs on all these countries, you can talk, for example, to the European Union and say, okay, well, we will drop your tariffs if you drop ours, as long as you are not that friendly going forward to China, for example. You gotta choose. Do you want to be with us or do you want to be with China? The tensions in the world are certainly escalating. Take a look at this. Ukraine Zelensky says that 2 Chinese men were caught fighting alongside Russia. So, for example, if the president went to Europe right now and said, okay, stop doing business with China, would they do it? Probably not. But if you put huge tariffs on everyone and then you say, choose, I think it's more likely to happen. But anyone for now who imports anything from China, oh, you're getting 1 or 4% tariffs, which have just been implemented. I think Farzad has the best assessment of the situation here. The president is betting on China to fold first. He thinks the US is better positioned, and I certainly think so. I do think that the US is much, much better positioned than China in this fight. China's exports of goods and services as a percentage of GDP were around 21%, whereas for the US, it's only roughly 11%. Also, if you pick just a single largest country which buys the most from China, it's clearly the US, unless you include a group of countries in one block. And if you look at the US trades more with Canada and Mexico than with China. And then on top of that, because China's GDP is so focused on exports, if you reduce a lot of these exports, you immediately lose a lot of the wealth in your country. And that has a cascading effect because it's such a big percentage of all the GDP. So people start losing jobs, businesses close, investment is reduced, large unemployment potentially makes the country a bit unstable. But the US, while it would also be challenging, China is nowhere near as big of a trading partner as the US is for China. And the US doesn't trade with the world as much as China does. Its GDP does not depend so much on trade. So the US is much, much better positioned here than China. Also, the US does not need to worry about, okay, if people get unemployed, suddenly there's going to be a government revolution and the way the whole country works is going to change. Protests happen in the US all the time and it's fine. In China, not really. So for China, the way I see this is more of a political issue than an economic issue. Whereas for the US, in a sense, it is largely in many ways an economic issue, but also a political issue, but nowhere near as political as for China. Because for a one-party system like China, there's nothing quite as bad that can happen as having a large number of unemployed people which choose to gather in large groups and walk together. Because, that's how revolutions usually start. In the US, a revolution is basically just voting in the other party. In China, you only have one party. You cannot just vote someone else in. So I do agree that the US is much better positioned. The president is also betting on the international markets partnering with the US versus China. He's betting on post-COVID skittishness. China will probably delay as much as possible. They do not want to look weak. They are extremely good at showing strength. Their entire culture revolves around it and not losing face. This is going to get really bloody, and there's a chance the entire Western world goes into depression because of it. Or, and this is what the president is betting on, the president wins, reshuffles the world to rely more on the West, and a huge manufacturing boom occurs away from China. The president would then concede enough to ensure China doesn't face a financial calamity. I think that's a pretty good assessment done by Farzad. A big shout out goes to him. But because China just implemented new tariffs, I would not be surprised if we see even more tariffs applied to China by the president. And as I'm recording, I pull up S&P 500, and I've never quite seen this in recent trading history of S&P 500. It's up over 6%. It was up almost 7% just a moment ago. What? Tesla stock is up 12% right now as I'm recording. Whoa, wow. Well, this is quite something. So here's what just happened. I have authorized, says the president, a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%. Also effective immediately. Now, so far, at this moment, it's not clear if the pause would be for all nations or just some. The president in the same post said he was raising the tariff on China higher again to 125% now. I'm gonna pat myself on the back for seeing the future as I was recording. Indeed, this is a negotiation tactic, and it does seem like Trump is going to go after China and try to reshuffle everyone to the West, go away from China, come to us. Man, NASDAQ is up 8% in one single day. We're not talking about a single stock. We're talking about the entire index, a list of 100 biggest companies in the US, basically. Oh, and here's the official message from the president about the tariffs. I think this is an important message to all investors. Based on the fact that more than 75 countries have called representatives of the US, including the Department of Commerce, Treasury, and the USTR to negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the US. I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%. Also effective immediately. So everyone is going to get a better deal except China for now. Now, the most interesting thing about all of this was before the markets exploded in a positive way, a few hours before that, the president did post this. This is a great time to buy. He already knew what's going to happen. And check out what Elon Musk posted here. Those who finance the attacks against Tesla will go to prison. And there are reports saying that the Attorney General of the U.S. may be launching an investigation into George and Alex Soros for allegedly financing attacks on Tesla property. Continuing with tariffs, I think Farzad has a good take here. We are officially at a full-blown trade war with China. Trump has forced everyone's hand to pick a side. Deal with the U.S. or deal with China? Trump's Trump card. You saw what happened during COVID. Do you really want to continue to over-rely on China? It is a good argument, actually. China doesn't have that argument. It's now a waiting game. How long can the US and China survive while the global economy grinds to a halt? Well, I think he posted that right before the announcement was made. The rest of the world is going to be fine. It's just the US versus China at the moment is in a trade war. Everyone else is getting much lower tariffs. No company is going to shut down because of a 10% tariff. Except those that solely only rely on China. But even a lot of these companies could relocate to another country and make their product there. And eventually they should be fine. How long can every player wait to pick a side? Well, for the US, there's no more urgency, really. I think the market is going to be fine. The economy is going to be fine. Anything that the US buys from China, the US can find other countries to buy from. For the most part, it would take a bit of time, of course, so there would still be some chaos, but overall, I think it's fine. There are many other countries with cheap labor, but this is certainly a good point. If a handful of huge players pick one side, there will be a snowball effect, reinforcing everyone to also again choose that side only and not the other side. At which point, the other side is going to have to concede or face permanent tariffs. However, we Tesla stock investors definitely have to pay attention. I said for a long time that China for Tesla is a big risk in the very, very long term because of tensions like this. So is there some potential escalation against Tesla at this point? Yes, I definitely think we should pay attention to that. Here's some more good points from Farzad. Let's assume the EU is mega upset at the president because of this tariff insaneness. They want nothing to do with the US moving forward. Is that enough for them to partner with Russia's biggest ally, China? That would just sound weird. As bad as they think the US is, the US has no intentions of supporting Russia, which is Europe's probably biggest enemy. And then there's the whole COVID situation. So the question becomes, who has a bigger trust issue? The president or China? I would definitely say China. The European nations are not in a military alliance with China, but they are with the US and they need the US. That relativism will dictate the discussions, and the president being Trump, he'll exert maximum leverage to get a deal that's beneficial for his goal. As long as the goal is to strengthen the US, then the country is well positioned to come out ahead. Now, the bigger question, and this is what I'm personally really interested in, what will China do in 2028 when the US will have a new president, and who will the new president be? And now Dan Ives, with whom I strongly disagree here. He says Tesla's future determined by how Elon Musk handles the next 90 days. Absolutely, I disagree with that. Dan Ives breaks down the brand and political heat Elon Musk is bringing to Tesla, from DOGE to Trump ties, with growing EV pressure from BYD, global tariffs, and leadership questions looming. How will Tesla handle these hurdles ahead? Well, it largely doesn't matter, because what does matter is autonomy. And actually, Elon Musk summed up very well what matters for Tesla right now. He replied to Alexander Murs here in this new post. This may be the moment when Tesla's factory building skills must become a product with national importance. The Tesla factory, especially our next generation Cybercab line, is the product. That, autonomy, and Optimus are what matter. These three things. And on this point, Dan Ives says Elon's political brand damage has allowed BYD to take the lead worldwide. I think James has a better point. He strongly disagrees with Dan Ives. BYD is expanding globally unabated, not because of Elon's political takes and brand damage, but because Tesla squandered their first mover advantage in the EV space and conceded to China, instead reorienting the business to autonomy. This was a strategic decision made in 2021, not here in 2025. And eventually, I believe it will actually work out very, 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 very well. But personally, I would have liked Tesla to have already released new models. BYD has tons of vehicles in multiple segments. Tesla still, according to James, sells 2 cars, really, and 3 if you add up the SX and Cybertruck, he thinks. This certainly seems like good news for Tesla. Morgan Stanley reiterates their overweight rating and a $410 price target on Tesla. They write, within our coverage, no other stock is so clearly identified with a volatile debate around trade and politics as Tesla. Regardless of the near-term policy path, we believe the march of embodied AI will see a proliferation of machines embedded with sophisticated robotics that navigate and manipulate three-dimensional physical space powered by agentic software foundation models. At the same time, the propagation of humanoid robots, when compounded over 1 or 2 decades, may change the fundamental nature of production and how an economy is defined. The ability to produce labor in a factory as machines make machines with minimal human intervention may alter historical measurements such as dependency ratios, retirement age, and GDP per capita. Well, if it does happen, I wouldn't use words like may. It's definitely safe to use words like will alter historical measurements. And Tesla is very well positioned to take advantage of all of that if this becomes true. Here's some more good news for Tesla. India will restrict market access to BYD as it courts investments from Tesla. So BYD, the biggest rival of Tesla in China, will not be able to enter the market of India, and Tesla will be able to take all of that market for itself. However, they specifically said as of now, it is a no to BYD. They did not say it's a permanent no. They said as of now. And by the way, last year, India rejected BYD's $1 billion investment proposal. Oh, Gary Black is trying to tell us something that he thinks investors do not want to hear. But Tesla 2025 deliveries are still likely the most important metric driving Tesla's stock through year end. Well, that assumes that there's no incredible progress when it comes to Tesla's FSD. If there's substantial, incredible, fast, quick progress, I don't agree with Gary here. But if progress remains relatively slow, sure, Gary has a point. But also, let's not forget about Tesla's energy business and Tesla's new factory in China. But with the tensions in China, okay, Tesla may want to build another factory outside of China to make Megapacks. Gary continues, 2025 delivery estimates have come straight down year to date and are now just 3% year over year versus 16% year over year at the beginning of the year. So there's a little bit of growth, but not as much, and that growth is decreasing. But also remember, we were going through a Model Y refresh. He continues, which is the main cause of Tesla's underperformance this year. I personally would reason to suggest that throwing Molotov cocktails at Teslas, finding gunshot holes at Tesla's dealerships in the windows, protests against Tesla, massive protests against Tesla. I would reason to suggest that some investors sold some Tesla stock because of that, and that drove the stock down. The question is by how much? And Gary, I guess, argues not at all, and only it is down because of reduced deliveries. He continues, in my honest opinion, the Austin autonomous ride-hailing test market in Q3 will likely be a non-event, since Elon's one toe in the water, go slow strategy likely means that Tesla drivers will assist initially, very likely, which makes the supervised autonomy rather than unsupervised. The other Tesla 2025 catalyst that can either help or hurt is the more affordable Tesla EV to be priced below $30,000. So Gary still thinks that it's coming out this year. Based on the rumors that I've seen before, it seems like very low chance of that coming out this year unless Tesla is doing a good job of spreading these rumors, in which case, well done, because then you wouldn't have any people not buying Teslas right now just because they think there would be a new, cheaper, smaller Tesla that they could buy instead. If a new vehicle is a new form factor, for example, like a hatchback that expands Tesla's total addressable market to the compact segment, similar to how the Model Y expanded Tesla's TAM to the CUV segment in 2020 and 2021, then the Tesla volume and EPS impacts could be significant and lead to higher 2025 deliveries and earnings estimates. If, on the other hand, the new vehicle is just a lower cost and lower price Model 3 or Model Y vehicle, which I am expecting to happen, and then a new form factor, I'm expecting that to happen next year. Gary continues here. We'll likely get a repeat of 2023 and 2024 after Tesla price cuts funded by cutting costs with little or no incremental volume. We now have the delivery numbers for the last week from China, and it comes out, I would say, okay. It's right there, smack in the middle compared to the 4 previous weeks in the same week of the quarter. So I would consider this as a good result, knowing that Tesla is still ramping up the production of the Model Y. Oh, well, this is a big statement from Elon Musk. Your Tesla has better AI than any military aircraft. Elon says that's accurate. James has a few points about Tesla's energy business because of the tariffs. Tesla probably has some relief for a quarter or so, depending on how much inventory they were able to build before the tariffs hit. But much higher energy storage costs from imported made in China LFP batteries, which Tesla uses, will start to be felt shortly thereafter and will weigh on Tesla energy margins for several quarters, given the way revenues and costs are recognized for Megapack. Tesla will look for batteries from someplace else. Paying 100% tariff on batteries, that makes it not really financially viable. I'm pretty sure there are other places where Tesla could get cheaper batteries than that. So Tesla has a challenging year-over-year comp in Q2, coming off a quarter where they sold 443,000 vehicles and 9.4 gigawatt hours of storage last year. A lot will depend on how well or not The Model Y ramp is progressing outside of China, and in China it's doing pretty well already. And how aggressive Tesla decides to get to move cars. Discounting should, in theory, be less required upon the launch of a much better product, but that is offset by overall brand deterioration and poor demand for Tesla in North America and Europe. They will still need to heavily discount the new Model Y this quarter if they hope to exceed Q2 2024 sales, believes James. So he's of the opinion that if we do not see aggressive discounting on Model Y, it will probably be due to a supply issue versus a scenario where demand is strong. But I'm not so sold on that, at least in the US. Tesla buy interest remains elevated post White House launch show, while sell interest is close to a previous 6-month average. Interestingly, the same goes for Canada, the UK. So I'm not that convinced that the argument that James is making is definitely correct here. This news just came out. Tesla's top financial controller leaves Tesla. He has been at Tesla for more than 6 years, and he joined this company, Archer Aviation, which is, relatively speaking to Tesla, a tiny company. Its market cap is $4 billion. So I imagine his pay is going to be better over there. So I don't see this as big news, not at all. Well, this is interesting because CNN is known as a left-leaning network in the US, but here's a chart showing that Tesla makes the #1 most American-made cars. On top of that, this CNN pundit, he said this about Peter Navarro, who is a White House official who severely criticized Elon Musk, and Elon Musk fired back, calling him basically as smart as a brick. Scott here says, I didn't like that he was denigrating what is actually a really good American manufacturing success story. Teslas are the most American-made car the administration is always talking about. Hey, let's make things in America. Let's have American-made cars. Well, Elon Musk is actually doing it, and then your guy goes out, Navarro, and craps all over him and lies about the fact that he's actually making cars in America. It's certainly cool to see someone from CNN actually defend Elon Musk and Tesla. So here's what this White House official said. We all understand in the White House, and the American people understand, that Elon's a car manufacturer, but he is not a car manufacturer. He's a car assembler. Oh Lord, it's like he doesn't know that Tesla is pretty much the most vertically integrated company that is a car manufacturer, making it the most car manufacturer you can be. In many cases, if you go to his Texas plant, Navarro continues, a good part of the engines, it's called a motor in an electric car, that he gets, which is the EV case, are the batteries. Okay, so he calls the engine the battery. Okay. Wow. Come from Japan and come from China. The electronics come from Taiwan. What we want, and the difference is in our thinking and Elon's on this, is that we want the tires made in Akron. We want the transmissions. There's no transmission in an EV made in Indianapolis. We want the engines made in Flint and Saginaw. And we want the cars manufactured here. Well, Tesla is already manufacturing cars in America. They are the most American-made cars in America. So no wonder the supposed God community noted. So yeah, Elon said Navarro is truly a moron. What he says here is demonstrably false. And that's why Elon Musk called him dumber than a sack of bricks. Elon explains, by any definition whatsoever, Tesla is the most vertically integrated auto manufacturer in America with the highest percentage of US content. Navarro should ask the fake expert he invented, Ron Vera. Here's some good news for Tesla. Tesla just won a ruling dismissing claims made by this movie studio over their alleged misuse of imagery from the film Blade Runner 2049 to promote Tesla's autonomous cybercab. Okay, so there's this Tesla Supercharger in the Washington state, which was bombed, destroying a power cabinet and doing damage to the electrical switchgear. Tesla is investigating exactly what happened, and FBI is already investigating this. Tesla stock today is having a great day, and I believe that Tesla stock is going to $1,000 per share, and then after that, well above it. But despite that, I believe that for most people, there is one investment that's actually much better than that. And I'm teaching my younger brothers who are teenagers that same thing. And that is investing in yourself. And my younger brothers, teenagers, they have been asking me how I'm doing numbers like this, so I'm going to teach them everything I know about money. I'm doing a 2-day event in the US in Texas, and there's a link down below if you'd like to learn more. But everything I know about making a higher income, making more money, I will be teaching them during that event. And you are welcome to come as well. There's a link down below. Make sure to like and subscribe if you haven't yet, and I will see you in the next video, probably on Friday, or if not Friday, then Monday.